Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about the week's topics that can include news about business, finance, taxes, accounting, or maybe none of those things. But what it for sure will be is discussions from the perspective of accountants. And with me today are Tammy Hess.
Hi, everyone.
And Charlie Ziegman.
Hi, everybody.
I'm Ty Carr, and here are the topics we're going to get into today. Apple turning your phone into a payment terminal. Will we follow? Big accounting firms addressing the great resignation with salaries. Are they on the mark? Top 10 IRS criminal investigation cases. It's more interesting than you might think. Apartments at the mall. I've seen this trend and thought it was a cool idea, but did you know there's a bigger strategy to it? And finally, Taco Bell University, a business school for future restaurant leaders. All right, well, let's get this going. We'll kick it off with Charlie.
So I've got an article we can talk about from Bloomberg called Apple to Rival Square by Turning iPhones into Payment Terminals. And so what's going on is, of course, Apple is, always trying to get into the next new technology and the next sort of wave of really payment services. They're at, in the past couple of years, they've been adding a lot of different type of payment services, like Apple Pay, the Apple Cash Card, all these different things. And so this is their next new bid. And for them, it's a really big play because if they can get this to work, it really rivals Square, which in terms of like business card readers, you plug in a device, you plug in a like headphone jack into your phone, and then you're able to take payments. But this would not require an extra piece of hardware that way. And it mentions that it would be like a tap of a credit card onto the back of the iPhone. And it also mentioned that it could even be a tap of an iPhone to the back of another iPhone, presumably through some kind of a link to Apple Pay. And so it's just kind of interesting. They apparently bought a company to get this all started a while back for, I want to say, let me see if I got it here. So they paid $100 million for MobiWave back in 2020 to kind of build out this feature. And they're going to have a beta in spring. And so I think you'll kind of be seeing some software updates relating to this. But the reason I wanted to bring it up is, I thought it was interesting because this is actually, it sounds new because they haven't been doing this because Square has these readers. But if you recall, Samsung has had this feature for a while. And I guess it took off in a sense that I've seen the commercials for it, but I can't say that I've ever been at the store and seen somebody take out an Android phone and pay at a register. And so I guess my question to you guys is, do you see this move playing out differently for Apple than it did for Samsung? Are they going to be able to harness this technology better, or are we going to kind of see more of the same, not total adoption?
Yeah, I think we probably will see a little bit better of a lift than Samsung. And the only reason why I say that is because typically when Apple pushes off, a new application or new something, they're really kind of aggressive about it in terms of, like, for example, the Apple Wallet. Like every time I get a new phone or I update my phone, it's the reminder that I haven't connected my credit cards and all that kind of stuff to it. It's always asking me if I want to do it, I should do it. Here's the benefits. It's like a constant thing, and I think that people tend to have a very strong trust and loyalty with, or Apple users do, so that they would be a little bit more willing to go ahead and jump on that. I don't know if that's the same for the Samsung users, in that sense, and maybe that's why it was slower. But I do think that, Apple does do a little bit more in terms of really pushing their new features and to really strongly encouraging folks to go ahead and do that. So maybe we will see a better type of lift, although it seems weird to me because I haven't done my Apple Wallet and all this various different stuff. I tend not to go that way, but if I keep on getting pings about it, maybe I'll try it out just because I'm tired of ignoring it. But I don't know. What about you, Ty?
Yeah, I think that's right. I think, and the simple boxes I put the different companies in, I think Apple tends to be good at leading in terms of creating social adoption. So something like this, where it requires getting people to actually use the phone as a payment process, I think Apple tends to be better at doing that kind of thing. Whereas Samsung, my own biased opinion, I'm a Samsung user, Samsung tends to be better at specific technical innovations, right? So people can argue about the quality of cameras and stuff like that, but Samsung's had really good cameras on their phones as an example, or they may have like a faster processor or technically a better kind of resolution on the screen or something of that nature that is purely about the technical aspects. And Samsung tends to be farther along at a lower cost when it comes to those technical things than Apple is. Whereas, like I said, Apple is better at like moving people to do things. So yeah, I mean, with that paradigm, I think there is a good chance that Apple will be more successful than Samsung at this because it's not purely a technical exercise. It requires a change in human behavior.
Absolutely. I think that's right. And then just to kind of branch on that, I think one of the other things Apple does really well when it comes to these new things is they tend to make it a way where it's like, it's all part of the sort of Apple universe. And so they kind of get you into their whole ecosystem and then you're a part of it. And the article brings up a point on that where it says, a key decision will be in the coming months if they enable third-party app developers to utilize this sort of new ability to run payments through the back of the phone. They're basically saying, well, if Apple locks it so that only Apple can utilize that, then of course it's going to become their big key advantage. But if they share that with third-party developers, that could play out differently. And so I personally think they're going to lock that down because it seems to be in line with all of their other decisions so far. But I guess we'll see as that kind of plays out. Do you have another article we can talk about, maybe something not so Apple related?
I do. I have an article from City AM sharing how a couple of the big four accounting firms are responding to the battle for talent. So we've discussed in previous podcasts that many companies are facing the great resignation, and professional firms are seeing that as well, and they have different ways of handling it. According to the article, KPMG just announced plans of investing $160 million into salaries of its employees. They're being quite vocal on this point, even posting on LinkedIn the following: increase in salaries embodies our commitment to quickly recognize the value of the value of our people create for our clients and firm. It is important to note that this increase, which could range between $3,000 and $7,000 per employee, comes after their annual review process and salary increases that were done back in October of 2021. The article also shares that Deloitte, but the Northern Ireland and UK version of it, recently announced their plan to introduce more flexibility. The article states that Deloitte will give almost $14 million to its staff for upgraded home work from home equipment. In addition, they're offering employees to take public holidays at their own leisure. So not necessarily having to take it on Christmas, they could take it whenever they want to. The managing partner at the Deloitte office said, our approach means that our people can choose when to take their public holiday leave on the dates that are more meaningful to them. So I did do a little research to see what Deloitte USA has been doing, and it appears that they also provided salary increases late in 2021, but they stated that it was based on the compensation market data. So these are obviously kind of different approaches in terms of how to deal with and incentivizing people and recognizing employees and hopefully getting them to stay and increasing retention. But do you think that there's a different version that will actually win this battle, or are they both kind of equally the same?
Yeah, I mean, I think I guess my cynical view on this is that I do think that incentives work, and I think that increasing salaries could definitely work. But I think, did you say, Tammy, they said $3,000 to $4,000 on average increase?
Correct.
Inflation last year was, I think the numbers came out were like 6 to 7%. So I mean, if you imagine that your average big four accountant probably starts around $60,000 and goes up from there. I mean, they're patting themselves on the back for like giving raises to keep people from the big resignation, but they're actually barely just keeping up with inflation with those kind of raises, it sounds like to me.
But it's back-to-back raises though, because they did just do a raise at the end of 2021 or
okay.
Raise now on that, but they're not saying they're not tying it to market data. They're not tying it to inflation. They're saying they want to recognize the investment in their people because the people really help them with their firm and their clients.
Huh. I would say, okay, Yeah, I mean that the fact that it's a back-to-back raise that could be great, but the fact that they're not tying it to market data, I guess that could cut both ways, though, right? So, are they indicating they think they're paying above market by giving these extra raises, or where do they actually sit? And that, I mean, that's what it comes down to for me is like, look, I think salaries do matter, and I think that if you want to keep good people around, you have to treat them fairly, and you have to have a sense of, as an employer, you have to have some kind of sense of what market is, and you have to try to stay with that. And I think and that's what the Great Resignation. If you look at the Great Resignation and you say, well, people feel like they're not being treated fairly, they're not being valued well enough, and they're leaving. I think that's kind of just a different way of saying that people don't actually feel like they are getting market value. So I think that's what it comes down to, without knowing the specific data for the firms in this case. I think that would be the point. Make sure that you're falling in market somehow.
Mhm.
Yeah, I think it's really interesting because they can say all they want that they don't tie it to market or inflation. And I get the mechanics of what they're saying there. They're saying that their math doesn't involve specifically looking that up. But I would say that more generally, we're all part of that market, and we are forced into kind of adjusting to that in some way. And so I guess I feel like that if you're panicking as an employer because people are resigning and you adjust their wage to make sure that they'll stay, even if it's not market, you're still reacting to the market. You're just panicking and doing it that way. And I think it is the right thing. As far as the question between flexibility versus the kind of raw number, I do think that more people, especially accountants, are going to find the raw number to be more appealing, because a lot of times flexibility is one of those things that it is there in the background, and you might say there's a lot of flexibility, but the role often defines what the true flexibility is anyway. So even if an employer says you can work flexible hours, you can come in when you want, you can have unlimited PTO, right? We've all heard that one. That's like, we're really flexible. But the reality is that flexibility is generally defined by what the outcome is, what the deliverables are of that role, because that's what's going to drive your true kind of balance there. And so, yeah, I think because of that, if people can get with me on that point, then that leaves us with just mainly caring about the number. So yeah, that's my take.
Yeah, and I would agree with you, Charlie, because I think that nowadays, especially with so many people working remotely, and in terms of by kind of not by force, but also now that they're starting to like that more, it's almost like providing the the investment in the work from home kind of equipment. I think that's going to become now more of a standard, where that's part of the job, because you are required now to work from home, and or you're leaning towards a flexibility kind of schedule. So it's almost like you have to do, in my opinion, both. You have to be flexible in terms of the work environment, supporting that type of flexibility with work, especially in terms of the work from home equipment. But then the salary and the dollars also make sense as well as another focus point to make people really want to feel valued and stay. So I think, Ty, you have our next article.
Yeah, so this is from the IRS, the top 10 criminal investigation cases for 2021. And I'll kind of read a brief description and count backwards on them. I might dig into a couple as we talk about this, or circle back to them. But yeah, thought this might be fun to go over, just to get a sense of some of the things people do out there. Number 10, a New Mexico couple stole funds from a nonprofit organization that provided guardianship, conservatorship, and financial management services to people with special needs. Boo. Number 9, a man conspired with others to obtain money through an investment fraud Ponzi scheme. That sounds like a run-of-the-mill kind of thing that people get into. Number 8, 2 sisters operated a Florida tax preparation business that filed more than 16,000 false tax returns for clients over a 5-year period. Ouch. Number 7, a man renounced his U.S. citizenship in an effort to conceal large stock gains that were reportable to the IRS. Number 6, A man operated an unlicensed business that changed at least 13 million in Bitcoin in cash, often for drug traffickers. Number 5, a foreign national participated in a scheme where popular online auction and sales websites falsely advertised high-cost goods, and those goods did not actually exist. Number 4, an ex-pastor of a church defrauded investors of $33 million by orchestrating a church-based investment scam. Number 3, a man sold false information or fictitious debts to a payday loan business, or payday loan businesses, excuse me. I don't know. I don't have a lot of love for the payday loan business industry, so that's I don't know. I don't know how I feel about that one. Number 2, the owner of a California company created a Ponzi scheme involving the sale of thousands of manufactured solar generator units that just did not exist. And number 1, a married couple who are currently fugitives, a married couple that currently are fugitives, had submitted 150 fraudulent applications for COVID relief funds based on a phony payroll, tax records, and documents to the Small Business Administration. And I suppose it's not surprising that the number 1 item on this list would be some kind of COVID relief scam. We've talked about those before, and certainly plenty of those abound. Before I throw it out to Tammy and Charlie to get their thoughts, one of the things I was thinking about on this is I was actually a little bit surprised that some of these were necessarily the purview of the IRS criminal investigation unit, in the sense that they didn't necessarily sound specifically like tax scams, so like item 4, for example, the ex-pastor who defrauds investors by orchestrating church-based investment scam. Let me see if I can find a little more on that to understand why this could have been this would be an IRS issue. Looking on the IRS website, they have more information on each of these items. So that number 4 item, the ex-pastor, it was Kent R.E. Whitney from the Church of Health Self. He was sentenced to 14 years in federal prison and ordered to pay $22.66 million in restitution for victims after defrauding investors of $33 million by orchestrating a church-based investment scam. At his direction, church representatives appeared on TV and live seminars to make false and misleading claims to lure investors to invest in church entities. Victims sent more than $33 million to the church and received fabricated monthly statements assuring them that their funds had been invested, when in reality, little or no money ever was. So I think what I find interesting about that is that, you would think that the IRS criminal investigation unit was primarily focused on crimes that involved taxes. Now, I think in this particular case, churches are afforded specific tax exempt status. And so maybe that was the angle that the criminal investigation unit was involved in. But I think what a lot of these cases illustrate is that while there may be a tax angle to these things often have victims that are more than just the Joe taxpayer. And I think what they're trying to show in this listing that the IRS published is that, hey, we're not just going after people who just didn't pay their taxes. We're going after real criminals who had real kind of victims, and the tax issues might have just been part of that whole thing. What do you guys think?
I think what you said in that last bit is exactly the same. Is the fact that, or is really true, is that basically, the IRS gets kind of a bad rap for prosecuting against for fraud tax or tax fraud or things of that nature. But when you tie it to a crime where there's victims involved and there's someone who actually is penalized for it, I think you actually get public support in terms of, wow, this is not right, or this is wrong. And yes, they should have been, prosecuted and paid these large fines. And that a lot of these things can be found through the how people are doing their taxes or filing, or things that are kind of come through that, a lot of crime does impact one way or the other a tax component, whether or not, how you're recording theft or your property or stealing things, or if you get an abundance of cash or selling drugs or doing those things. There's always the IRS is involved in everything. So I do think that there is that kind of angle to that. But I also, when you're reading the list, I think what gets people really riled up is the fact that when you're dealing with a nonprofit or some type of the COVID relief fund, because a lot of people are thinking that you're having money that is supposed to be going to help somebody or going to a greater good. And so when people find that there's individuals who are not doing that, it's almost, it doesn't make the fact that they did a crime worse, but in the public eye, it almost does make it worse. And that people are asking for a lot stronger of a sentence or payback or something, because it is involving something of that nature. What do you think, Charlie?
I'm just glad the IRS is chasing chasing these people, and not just those who might have, forgotten to put something on their taxes or something innocent. From that angle, I think it's a good thing. I think some of those in particular were a little bit interesting. I got a real kick out of the guy who became like a sovereign citizen to like avoid his capital gains or whatever. He just like decided he's not part of this system anymore. That's a lot of fun. But some of these I was looking at and I was just thinking about, I'm not sure exactly the mechanics of that scam, but if you're involved in a church-based investment scam, I think part of the feedback here I would be giving is that investments is a big industry and you should be using probably more traditional vettable investments than something, even just generally being church-based. Being an investment tied to an entity that is nonprofit sounds strange to me. And so I would kind of be, that to me causes questions. But other than that, I thought the rest, just like Ty said, they did seem like sort of the run-of-the-mill things that I would have heard in any other year. But yeah, it's good that they're chasing them. That's for sure.
All right. And I think, Charlie, you have our next article.
Okay. So yeah, I've got another one we can talk about from the Orange County Register. It's called Malls Adding Apartments to Offset Dwindling Number of Shoppers. So it seems like kind of a natural correction here, but of course people are going to malls less. And one of the reactions to that is to just shut down. But another reaction is to change to make better use of our resource here and change what we do and go ahead and turn into a housing unit. And so the article kind of hones in on a 309 unit apartment complex that's being put on over a parking lot in Santa Ana's Main Place Mall. And it's part of a bigger project that's going to become like a $500 million redevelopment of this really old marketplace. And there's going to be all these great things, right? Open air courtyards, blah, blah, blah. But the article talks about just how this is a two-pronged solution here. It solves the fact that malls have nobody in them anymore, and it solves the fact that we have this housing shortage. And so on the one hand, I look at that and that sounds like really good, right? That sounds like a winner. On the other hand, if I were to propose to you the idea a couple of years ago that maybe we would all be moving into the malls or sort of moving closer to them and all these new mixed development things, it didn't seem obvious to me back at that time. And so I gotta ask, is the market correct on this one, or is this gonna actually become a normal thing that we take over these old decrepit malls and turn them into apartment complexes? Or are we gonna instead kind of be looking back nostalgically on the days when the mall used to be an actual mall? What do you guys think?
I wish I had the answer to that. I ponder that myself, because I do think that in a way it is a great move if you're, rather than having a building sit empty or not utilized at all or very little, to be able to convert it just to help a need that does exist, where housing is one of those needs. It does make sense to do that. I just don't know if it's too soon. Are we ever going to get to a place where people are going to go back to the mall? Because if you think about it, I used to go to the malls back in the day, especially for Christmas or whatever, be able to hop around very store to store and it'd be packed full of people and all this kind of stuff. And I went to a restaurant that actually happens to be inside a mall, and walking around there, there was nobody there. And so, yeah, I think that it's obviously currently hasn't been used for the last couple of years probably, but will there ever be a shift where that goes back to the most common, place to go? And I can even remind back way in time where as a youngster, we used to hang out at the malls. That was the hangout place, the food court, and then you walk around. We didn't have any money to buy anything, but we just walk around and hang out at the mall. And obviously that's not being done right now, but could that be a place where it comes back? Same thing with movie theaters or some other things. I think time will tell. It's just how long can you wait before you actually make some of those decisions. And building, or reconverting a building into an apartment does take time. So there are, they need to go ahead and move forward on that to be able to open up housing. But I don't know if we're going to see that go across all America for all malls that are in its place. But I have, on the other side, I have seen a building here locally that used to be a grocery store, and it's been vacant since, I would probably say, about 8 years now or so, and there hasn't been anything. I was like, oh, could they convert it to a rolling rink? Can they convert it to something? But it's just been sitting there, unoccupied for the last 8 to 10 years. And so I do wonder, what do we do with such massive infrastructures like that? Can we repurpose that? And what is the timing to do so? So hopefully Ty has the answer.
Yeah, I mean, I think it's a good idea. I think when my wife and I were younger, we liked the idea of living downtown because you could be in the mix of it. You could be close to a cafe, close to the restaurants. You could just kind of walk to, you could walk to your happy hour and then back to your residence. You could walk to the coffee shop and back to your residence. And I've seen, it's interesting on this topic because I've seen developments in our area that were not, I don't think they were old malls to begin with. They're new developments where they're combining. It seems like the fashionable thing to do right now is to combine living space with on the ground floor, restaurants or cafes or whatever. And I see some of those setups sometimes, and I think, oh, that would be cool to live there. I imagine myself living there, and then I think, oh, but then I wouldn't have anywhere to garden. So it's not for me now in the space and time that I am today. But when I was younger, I would have been totally into that. And certainly maybe when I'm older and it's not very comfortable for me to garden anymore body wise, I might be back into something like that again, right? And so I think that this is an idea that could have legs, and the idea of like converting an old space that otherwise would go unused, I think is kind of cool in some ways too. So I'd love to see how this goes, how this plays out.
Yeah, it'll be exciting. So we'll all be kind of watching as it develops. Just one last thought on it before we let it go. They brought up like an interesting problem that's contributing to how all these malls are failing. That one of the issues they had was that all these big anchor stores like Sears and a lot of these big ones, those will leave, and then that was what was drawing in customers. So now all the other ones who managed to stay and survive are failing indirectly. So perhaps by making it into a housing unit, it will better use that space and enable those other ones to survive. So like you said, we'll see how that plays out. Do you have another article we can talk about, Tammy?
I do. So this article comes from Market Watch, which shares that the new partnership between Taco Bell and the University of Louisville. You may be thinking they must be adding a Taco Bell in the food court at the university, but that's not the case. Taco Bell is launching the Taco Bell Business School at the university. This will be a 6-week boot camp focused on franchising. There will be courses pertaining to financing, human resources, marketing, and much more. The chief executive of Taco Bell stated that through the Taco Bell Business School, we want to show our ambitious restaurant leaders how their careers could flourish at Taco Bell and see the opportunities that they may not have previously considered. So Taco Bell will also be offering a scholarship to employees that apply. The article didn't say what the cost of this course would be, and I couldn't seem to find it in any of my searches on the internet. But what I did find is that Taco Bell has offered tuition assistance to its employees ranging in various different dollar amounts for educational purposes. So I really find this program really interesting. And I do believe that, oftentimes the best person to run a franchise is a person who actually has the experience of working there. And while I do find, offering the scholarship to offset the cost of attending the program, whatever cost that may be, is encouraging because, depending on the cost, that could be really helpful for a person who's working currently at Taco Bell to actually be able to attend. But what I think that this is missing is the actual cost of starting a franchise. So from what I saw online, the cost of operating a Taco Bell franchise can range from $500,000 to $100,000 to $2 million. So I'm wondering if Taco Bell is providing any help in that area, because I would most likely say that a younger person or a person who is currently working at Taco Bell may not be able to finance $2 million to actually open up a new franchise. But I also wonder if this course will be successful in generating new franchise owners that started their careers at Taco Bell. And could this be something that other franchisors or businesses could look into to really, encourage that kind of model? What do you guys think?
Yeah, I'm kind of with you. I think while it seems like a nice gesture, it seems short-sighted. I may be different than your guys' opinion on this. I personally wouldn't advise a person to start a franchise until they had at least tried some form of their own business in some way, perhaps something a little more scaled back, because as you said, I mean, there's a large investment on that. And I think that if it's true that Taco Bell wants to train franchise owners better, they would probably be better off doing that as a component of their franchise program for those who have gone ahead and expressed interest and become part of the Taco Bell name or whatever. And so I think that, to me, because of that, this feels like marketing and a feel good, thing on Taco Bell's part to put out. I could be wrong in that, and I think anything that helps people get more educated is a good thing. So I don't want to take away from sort of the good of what they're doing. I just feel like, if you want to make franchisors better, do that through your franchise training program. Everything else is not what I would call real. What do you think, Ty?
Yeah, I guess what wasn't clear to me is whether this was targeted specifically to the owners, or was it targeted to like general managers of Taco Bell, people who might be employees in various franchisees.
Yeah, so the way that the article talked about it was focused on the employees, the current employees, whether they be the managers there or even, a lower level person who's entering in there that wants to see what it would be like to do that. And then they would have existing franchise folks come in and mentor and share their experiences. So and that's why I was trying to figure out like what the cost was, because I was trying to figure out if I wanted to open up a Taco Bell and I wanted to take that course, could I do it? I don't see where I could. So I think you have to be there at Taco Bell in order to do that, that program.
Yeah, I think, I don't know if it still exists, but years ago there was like a McDonald's college or a McDonald's university that was, and my understanding of the way it operated was that it was building an ecosystem for the McDonald's franchisees, in the sense that if you were a McDonald's franchisee owner and you needed to hire a manager, your manager could be somebody who had this training from the McDonald's program, right? So that could be, and that part of it makes sense to me. Like if they're building basically an ecosystem where they're helping build a workforce for the franchise owners, the franchisees, that part makes sense to me. I think kind of what I kind of heard you and Charlie pushing back on a little bit, which I would agree with, is if in fact this is basically just another franchisee service in disguise, right? Because when you sign on for the franchise, you have to pay all these fees to corporate, right? And you're supposed to get things for those fees. There's a bunch of services that you get. So, if this is really just kind of an add-on franchisee service where you're paying extra for some additional training or whatever as a franchisee owner, yeah, I would say that doesn't feel particularly good in that regard. But if it's creating an employment pool of qualified people for the franchisee owners to pull from, then that part of it from the franchisee owner's perspective could be kind of cool. You still get to the other questions that you guys raised in terms of, well, these employees and people who might do these programs, how exactly do they pay for them, and how does that work? So I think this could be run in a way that could be a really good thing for the whole kind of network, the Taco Bell family, right? Or it could be run in a kind of a greedy, cynical way, as most things, right?
Yeah, well, we'll see. It's supposed to start this month. So although I did go to the university's website and I couldn't find anything about it. So that's why I have a feeling that's really tied to the franchise and it's just being done at the university. But, not that I was going to register, but I was trying to see if I could, but I can't. So it'll be interesting to see how what actually comes from it. Like, does it really lead to more people who actually work there that are able then with this course, able to go into the whole franchise world, or do they become great resources for people who already do own and are are part of the franchise world. It will be interesting to see what happens. So I'll keep my eye out to see if there's any success rates on this or kind of what the outcome will be. But yeah, that's something to kind of keep looking forward to.
Yeah. And if anybody at Taco Bell is listening, hey, we might be interested in taking some courses. So let us know. How does this work?
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Thanks for watching. Thanks for listening. And please tune back in again next week for more business updates from an accountant's perspective. Also, please check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to nonprofits. Thanks, everybody.
Bye.
Bye, everyone.